Greetings, traders. This is Mohan here, and welcome to our afternoon session for the Boomerang bi-weekly training. I'll look forward to showing you some exciting things today in the markets have been happening over the last 2 weeks since our last meeting, and we'll go over all the details. Pretty much on this webinar today, I'm expecting it to be more or less just kind of a review of all the trade setups. I think that's the best way for us to learn. We haven't done that in a while, and I'll just spend the next about an hour or so going over the exact trade setups that have occurred over the last 2 weeks so you can see how accurate Boomerang is and how well it works. And being as how the repetition is the mother of all learning, by seeing these over and over and over, the same old setups, the same routine of the markets, watching Boomerang, you get so darn good at watching Boomerang and how it works. You see this happening every day, and it makes trading a lot easier, and it becomes a little more pleasant in very fast, high-speed business that we're in, high-risk business, which brings us to our friendly disclaimer and risk disclosure statement, which we always like to say, the U.S. government required disclaimer that futures trading has large potential rewards and also has large potential risk. You must be aware of the risks and willing to accept them in order to invest in the futures. Don't trade with money you can't afford to lose. Don't trade with your rent or your mortgage money or Johnny's college fund or any other essential things. You have to have extra money to trade. Otherwise, you can just trade on a simulator and learn while you work another job or something, and then you can become good. You can still buy Boomerang, spend a little money, spend money for the monthly Ninja lease, and then just practice on the simulator trading, coming to these free webinars. And gradually, as you get really good trading and you get some extra money ahead beyond your bills and whatever, then you can go ahead and use that to fund your account and start trading. So just be aware of this risk disclosure statement, and thank you very much. I appreciate that. It's important we all follow the rules and just be very careful with our trading as much as possible. So with that in mind, I'm going to get started here. Let me bring this over here to the Boom blog. Now, just so you're well aware, from the start, the default place to go for everything Boomerang is boomerangtrader.com. You can go to boomerangtrader.com, and there you'll be able to see all the things that I post and things that are posted already that are very informative about Boomerang. Primarily, if you go to the blog section here, you're going to find all the latest reminders of upcoming webinars and things, and then there'll be recordings of most of those classes. I'm recording this one now, and I hope the recording comes out, but you know the way technology is, you can never be quite sure. But this is a great webinar that I did recently here, which was on the what I call, see what I called it here, this is today's reminder. The previous one we had here, which I called the Boomerang System Components and Trade Method Rules. I'm going to change the name so it'll reflect that on the video. You'll see it clear when you go on the blog. But this is one I did last week, 2 weeks ago. It came out really wonderful. It came out really clear. I had a lot of comments about it. I would just went right into the components of Boomerang, and then I went into the exact methodology. That's all I spend time on doing. Today, like I said, we're going to take that methodology and those components and go over 2 weeks of trading. So always feel free to go to our homepage in our blog and just go through the site, and you'll have a great time learning all the things about Boomerang and how well it works. And that's really what it's about. It's just coming in here and looking to create a career in trading and be able to make excellent trades every day and not make such a big deal out of it trading. You know, so much when you're on the learning path, or if you're in a losing phase or a break-even phase, all you think about is trading, and oh God, I got to get profitable, I got to get it right, I got to get it right, etc., etc. Well, and that's true. And by the way, thank you very much for the confirmation on the sound and the audio and the visual. That's most appreciated. I forgot to ask about that. But the webinar is being recorded right now, and like I said, if everything works out well, the recording will come out good, and we'll be able to you'll put this back on the blog here tomorrow, late tomorrow, and have it for you to rewatch if you'd like. So let's get started. What I'm going to do is real simple. I'm just going to scroll back I've got 14 days loaded here. And then for you, those of you new to Boomerang, I know this is real basic. You just right click on the chart, data series, and it will show you right here how many days to load. 14. Then you click OK and close, and you'll have 14 days in the chart. So I'm going to go over that with you right now. And the Boomerang method, the components and everything, but we'll just do it in a general way, assuming you've watched these videos and you know. Now this is a West Coast chart, so this chart opens at 6:30, which is 9:30 Eastern Standard Time, and you'll be able to adapt accordingly. Now, I always like to use large, blown-up charts. I can't stand it sometimes. I see these sites, they run promos, and here's what their charts look like. I swear to God, I see this all the time. They go, see, we were long right in here. And you go, where? I don't know why they even do it. I can't figure it out. I'm telling you, when they do that, I become highly suspicious. It should be wide open like this so you can see the exact entries and exits. No games being played, please. So, here's the thing. First thing, you should already know what the components of Boomerang are. If you don't, I'll go over those briefly, but there are 3 methods for trading Boomerang. Well, let me quickly explain the components. It's the simplest thing in the world. You have the dynamic trend bands, which is this thin dashed dotted line here, and the thicker line that's solid is the dynamic trend band number 2. This is the Cobra, which usually front runs the dynamic trend band number 1 right here. This is the Cobra, and everything changes color according to the bias. Then you have the fastest line here is this thin dash line, which is our trade signal line. It took me many years to develop this and get it just right. It's very sensitive, but it'll color the candles according to the shifts in the trade signal line. So what we're doing here, this is an arrow. These are trade channels, these shaded channels. See those? The green and the light reddish shaded channels. So when those open, that's opening up a new bias channel in that direction, and an arrow will mark it when the channel opens, and we use that as our cue to start looking for a trade. When the trade channel opens on the sell side, for example here, right about 5 minutes off the opening, this was back on 9/24, September 24th, all we're doing, well, those are the components. The other components are the bias index 1, bias index 2, but I don't focus on those as much anymore because since I developed and refined the dynamic trend bands, they're so potent that they allow you to get on the right trade setups along with our trade channels and our Cobra. Just works beautifully. But really, if you want to, you can use the confirmation. You're going to see in the bias index 1 and 2, you're going to see yellow histograms by starting out. They may be red if it's a downside move, but the idea is that they're on the below the 0 line. See that 0 line? They're going to be below that. They're going to change either yellow or red, and above they're either going to be yellow or green. Yellow is the neutral color. Well, once those start changing yellow, you got a hint that the market's getting ready to shift bias. And you see down here, everything's flat in the 0 line. It's bubbling up red and green and red. And then once they lock down on red and everything's turned down in the 0 line, that's your market force confirmation on these 2 indicators. But for today, and when you're trading mainly, your main focus is going to be up here. Makes it simpler, and that's all you're looking for. Now, I do have a set of standard 14-period Bollinger Bands on here. I just like the Bollinger Bands because they tend to box in the trade channel real nicely. And also, Bollinger Bands are used by hedge fund managers and professional traders around the globe, have been for a long time. And what is a fact is that when the prices tap the Bollinger Band on one side, it tends to open up that side of the market. Now, that doesn't mean they're going to go straight down or straight up, but it tends to open that side of the market. They're going to reflect back, tap again, move lower. You see how that works? It kind of just follows that Bollinger Band on this particular channel. So, I could ask it as a quiz, but I'll ask you just, and then I'll show you. But what are the 2 trade setups we use in the 1 modification? That's right. There's only 2 trades technically, and that is a new sell channel opens. The dynamic trend bands, if they haven't already crossed, are matching color. Two conditions, either crossing over each other or matching the same color. And what is the third one? Come on, I know you know it. That's right. The third one is that if the spread is 1.5 or less between the dynamic trend bands, you can take the next pullback to the signal line in that new buy or sell channel. In this case, it's a sell channel. You can see right at this point here, 32 quarter, 30 quarter. So that's a 2-point spread right there. Do you see that? You have to be quick on your feet with the math. Just takes a second. 32 quarter, 30 quarter. That's 2 points. So you can't take that trade. Here's another pullback to the signal line here. And at that time, the spread was 30 quarter and 32, getting pretty close to 1.5 points. So you might have missed this one, or you might have jumped in, because usually you can just do a visual lock on. And when it's about like this, when you have the chart blown up at this level, that's close enough. I mean, that's your tightening of the spread. Had you caught this one, the trade would have been over in a millisecond. 27 dove down to 21. That was it. If you didn't and you waited here until they matched, well, you've got another pullback right here at the signal line at 24.50, and down they go. Now, on this one here, though, because the trade channel opened and already ran pretty quick from 29 points or 29 down to 21, that's a 9-point move. That's a pretty big move. On this one, you would have it would have been better to think, let me just trade at the Cobra. Now, here's the rule on that. If it's a modification of the same rule, but it's the same setup, but just a little modification. If the trade channel opens and the market runs and the spread was not 1.5 points or less and you didn't get in the trade, you still don't want to buy at the bottom of a fat channel. If you turn your head to the left, you can see it's kind of got a belly on it there. But the qualification of it makes a run, but then you have the dynamic trend bands crossing over. You don't want to miss that trade. All you want to do is just trade it back to the Cobra, or in some cases up into the Cobra DTB number 1 zone, like you can see right up in here. But if you just, as a rule of thumb, just said don't take the signal line, take it at the Cobra, 26.75 would have given you a better entry, and down you go for 3 points. Now you can see from this channel, the trade number 2 that we use is in a trend type move like this. If you get a counter reversal that's strong enough to create a reversal arrow, in other words, a new buy channel, that fails, then when it goes back to the sell arrow, then you can take the next yellow dot and sell a second level move. We didn't get that here, so we just had one winning trade there and nothing as they slid lower. That was 9.24. I'm going to kind of take some notes here. Do you see that? If you made one trade, you would have made $60. It would have shown up in your meter over here as $60. One trade, 3 points times $20. $60 minus the commish of about $12, or approximately $4. Shouldn't pay more than $4 for a round turn, pretty much. If you're close to that, it's okay, but call your broker and negotiate. If you're going to be making 10 boomerang trades a day, they should give you a better deal. Okay, so that trade didn't. So the next thing you look for is when you get a crossover and it's relatively smooth, not all herky-jerky and whipsaw, which about 80% of the time you'll get that on a big downside or upside move. Right after the move's over, you get a lot of whipsaw going on. No problem, no problem. What you want to do is, if you don't see that, then you can prepare yourself to take the buy trade. Same thing, you look for that tight spread here, right? And a pullback to the signal line, which was right here at 7.5. And 7.5 ran up to 10 here. So you missed 3 points by 2 ticks. And then they drop back down and they'll move to 550, but that's the stop is 5 points, so you don't worry about it. You got the right configuration, you got the new crossover, you got to hold that trade, and then of course 750 ended up running to 1050 easily just shortly after that for trade number 2. Do you see that? So you're literally in the first half hour of trading, you made 2 trades. Now, if you had on 4 contracts, after commission, you're making about $230. That's after commission on 4 contracts with a 3-point move. You've got $460. You might want to stop for the day. It's up to you. You say, no, I'm just getting started. Well, that's good. I appreciate your Rambo tradingness because I'm kind of like that myself. Nothing wrong with that, but at least stop if you're trading the U.S. stock indexes and you got 3 or 4 or 5 winning trades in a row. Try to stop before or right around or before 11:30. After that, the market changes its tone a little because what happens is that's when the European markets close. Those folks all go to bed and they leave the market, and a lot of that influence leaves, and the market tone may shift a little, and the rigors of the U.S. markets in particular are going to have more control over that market like they did today. Remember, this market today, I had forecast for the market to be pulling back strongly very soon, but because of this big bullish ramp up and all the bullish prognostications coming out, Dennis Gartman and the rest of the crowd on CNBC, the market was up 180 points approximately, and they pulled back down to where the Dow was minus 40. So there was that move, and I said, okay, I was short on the S-Dow, which is a triple short the Dow, and I still am. I'm holding that. We're still going to get a larger blast to the downside, but look at that nice comeback. You got to admit, coming back from being down after being up 180 and then down 40, coming back, closing the Dow at 16,912 at plus 122. That's a good comeback. Yow. So we'll see what happens tomorrow. I'm going to hold this trade. Maybe they'll try to push them up a little higher with the bullish move. I believe that they've started quantitative easing again secretly. They're not talking about it, but I see it in the way the market trades. I've been around so long that I can see it in the way the market's trading. And then that reversal off of that dip. This market's got my indicators, market force indicators are calling for a stronger lower move. There was no reason for that dip to get bought up this strong. It was quantitative easing, I'm telling you. I can practically assure you that when we get to that day at the end of the session here, I'll speed up in a minute, you'll see what I mean. I'll point it out to you. Anyway, so here's a second level trade that didn't destroy the downside move because the dynamic trend band stayed strong. This is that other trade number 2 that we take. New buy channel, pullback signal line, all the trend bands match. 12.5 shoots up to 1950. Third winning trade in a row. Not bad for an hour, or not bad for 50 minutes of trading. Okay, so now the market, this is just the routine of the market. You got to love this because it's not complicated. Trading can scare the pants off you because it's like right here we're getting this whipsaw and everything. But look, it's the same routine. The Cobra Cross is under the dynamic trend band number 2. The spread is tight here, right? The trade channel on the sell side is open. Pull back to the signal line right here, 11 even. And 11 whipsawed up to 14. Not pleasant, but not stopping you out. That's why we don't use 2-point stops. Don't do that. Use my method. Use the 5-point stop. We get 90% winning trades. They got to have room for that trade to move. You start thinking you're going to save yourself money tightening the stop, you're going to get stopped out every time, and it's not the method. Don't focus on losses. We have 90% winning trades. I don't know how people can go on my website and read everything. We guarantee 90% winning trades, and then they start trying to fool around with the stop because they're all focused on the 5-point stop. It's like, didn't you read what the blog said? 90% winning trades. That means out of 10 trades, 9 are winners, 1's a loser. So what? Let the loser happen. But they do the opposite and they try to tighten up the stop, all focused on the loser because they're used to losing. And that's most of us, we get afraid because we're so used to losing until we have a proven system like Boomerang. What to speak of a 90% guaranteed winning trades. And so then we tighten up the stop. Now we're back to losing again. It's kind of a self-fulfilling prophecy. Oh, Boomerang doesn't work. No, jerk. You move the stop. You're not supposed to change the stop. The rules in the system is set up for a specific reason. Come on, you're just going back to your old ways. You're using my proven method, and you're going ahead and setting yourself up back to being a loser, and there's no need for it. Not at all. Sometimes it's healthy to beat yourself up a little bit to discipline yourself, and other times you got to be nice to yourself because trading's difficult, and sometimes you feel like you're talking to two people in there. One said to hold short, and the other said to move the stop, and the one who said, no, we're going to follow the system and hold short, and the other one got in here, got short at 211, they went up to 14, and they panicked, and they stopped it out or whatever. So whatever, what can I say? Third winning trade in a row there. I think that was it. No, that was a fourth winning trade, wasn't it? Yeah, 1, 2, 3, fourth winning trade. Here, this is the fifth winning trade in a row. Sorry. This is the fifth winning boomerang trade on 9/24. Fifth winning trade by 1 hour of trading. So you say, well, I'm going to keep going because I love trading. Okay, great. Well, what do you see right here? That's right. Level 2, authorized to take a level 2 trade, makes a counter move. There's the arrow. You got to have the buy arrow, the counter move channel, because that force of failing, the failure force of this going into a new buy channel and failing sets up the new sell trade. If you didn't catch it on this bar, the arrow and the dot on the signal line came out at the same time. Sometimes when both those alarms goes off, it kind of makes a pop in your ear on the headphones, and you might miss the trade. Don't worry, just take it right there. Boom, down they go. Sixth winning trade in a row on 9/24. Now they're going down further. Now this is like a third level trade, but we don't take third level trades. Now you might have taken it because you saw the crossover and the whipsaw, and then you saw the trend bands matching. It's not totally wrong because you saw these trend band colors matching. You took this trade here. That would have been a winning trade. I'm not going to count it because normally once you get the crossover, I mean, again, they're all matching. You can take that trade, but the downside has already kind of run its course. So you want to watch more for the long side. So after the market starts bottoming out, notice all the whipsaw coming in. Here's a big whipsaw here. But you've got the matching dynamic trend bands. But when they shoot up this fast, what's the rule? Don't trade the pullback signal line. Trade the pullback to the Cobra because they shot up like this. It's a very simple rule. The trend bands have crossed. They're now matching color. You got the upside forecasted for you already when they shoot up like this. So just make sure and get a pullback to the Cobra. Or, I mean, if you need to have an absolute place where you want to buy them or sell them, or you can figure the space between the Cobra and the DTB number 1. So right in there. But either way, it would have been fine. Just get in that trade and watch them run up for trade number 7. You can see what I'm saying here. I'm just showing you according to the rules. And the rules are stagnant, just like the dots in the signal line. I can go back a year on a chart like this, and this dot will be in the exact same spot because historically that's where it pulled back the signal line. It's not that everything changes because the market moves along. So that's why I can use these still charts to show you exactly where to trade. You ingrain it in your brain how to use the method. Then when it shows up live, you're able to take it. Because a lot of times when it's live, it completely throws us off. It's kind of like a guy, and I know this. I have a friend who worked at martial arts, and he worked, and the teacher made him a code teacher, and he got really good, and he was breaking boards and everything, and he lives down near the beach area, nice area, but sometimes it's near some bars. It gets a little rowdy, and he went out in the alley, and they were some guys were loud talking, and he just, it's 3 a.m, went out there and asked him to quiet down, and they actually they kind of beat him up a little bit. He got away, but the point is, when the action on the street started happening, he forgot a lot of the stuff that he had trained so well in. In the gym and with the people around and all that, it's a little easier when you're sparring with somebody, but in an actual street fight, got a little bit difficult. He had to get some stitches, and he was all right. And the police came and they got the guys. But the point is he was telling me, he was kind of like really upset about it. Like, God, I forgot a lot of the things that I knew because of the fear of an actual confrontation where this is for real. This is not, fooling around. And so it's like that in trading sometimes too. I'm just giving you that example, although a little frightening. When you start seeing whipsaw coming off and all that, you start getting all panicky and think, I got to solve this. I got to solve this. No, you don't. You don't have to solve anything. Just sit back and wait and let it go away or let a trade pass you by. It doesn't matter. See, like here, notice how the dynamic trend band number changed colors. Number 2, that's your foundation bias. It was always still bullish. So when all of these dynamic trend bands finally stabilize and shot up again, you can just go right back into your core method of trading, pull back this sig line here, and up they go. And they kept whipsawing, and then they ran up again. And then we get to the top, and we're just waiting for everything to turn red. And sure enough, just as the sun rises in the morning, even on a foggy day, Boomerang is going to, the same old rules are going to apply. Here's the crossover on this candle. Here's the pullback sig line. Down they go. Trade number 8. Winning number trade. That's if you stood through aside all of this. You didn't take this trade or anything. You just waited. Then everything became clearer. You took this pullback sig line, trade number 8. Same routine. Look at this. Counter reversal on a very steep dynamic trend band line here. Counter reversal that didn't change the pattern. When the buy, there's the buy candle. You got to have that. The buy arrow. When the sell arrow came back in again, you grab that next yellow dot, and it was an easy trade back again. It's an authorized trade. It's a winning trade. And we're still only, there's still an hour and a half left of trading. So there again, look at that. Matching dynamic trend bands, pull back the sig line, up they go. Trade number, 10 winning trades in a row. None of them even came close to stop. One of them, I think, moved 3 points against us. That's about it. And if it had hit 5 points, so what? Who cares? Got stopped out. You've had 10 winning trades. Don't be greedy. Same thing here. Look at that. Run up, sell arrow to counter this move. Have to have see the sell arrow print and some red candles in this case. Buy arrow, just grab the next blue dot and up you go. Trade number 11. So you start getting later in the day, you want to be, especially, oh my God, especially after 11 winning trades. I would have been done after 5 or 6 probably. I'm a risk cutter. Over the years, I used to be a wild Rambo trader. I still can be on some days, but everything's controlled and used according to the rules that I have. But I'm just saying that nowadays I'm just so risk averse because I know the minute you're in the market, you got risk, and it's heavy. Right after noon, we usually don't trade much after noon, but here's one right at noon. Everything's tight, everything's crossing over, everything's red, and there's your 12th trade of the day. 12 winning trades in a row on 9/24. You can go back over your Boomerang charts and see for yourself. It was 9 winning trades in a row, and then here we are coming in close. So we don't worry about this, and we move on to the next day. Now, just to once again do the math with you, the easiest way, you can do it however you like, is you take one contract. So one contract or one trade setup with 3 points with one contract is going to be $60, right? And that's $60 minus $4. So figure $56. 56 times 4, 224. Well, let's see. 4 contracts times 60 is 240. 240 minus $16 for commission. If you figure $4 round turn, it could be that, a little less, but yeah, 224, same number. So figure for our round purposes, 225 every time you make a 3-point trade on 4 contracts. So times 12 winning trades, that was a 26.8 equals $2,688 after commission, trading all the exact, simple, crystal clear, not muddy, nothing I fudged or anything. Boomerang trade setups on 9/24. You could go back over your own chart and verify all this. You'll have the recording tomorrow later. $2,688. That's a good day of trading, and the trades were pretty much spaced apart, so you had time between them to think about it and everything, and relax before the next trade. And it's a good deal. Now I'll be going over your questions here in about 10 minutes, but I got to get through some of these other trades. Now, what I just showed you actually on that day was a wonderful example of how most days are, just about every day. Other than the variations of some particular political event or some market bias, even no matter what the market bias is, Boomerang is going to adjust for you and trade within that trade channel and dynamic trend band configuration. So you don't even need to figure that out. I do a lot of things in my daily trading room to do further analysis of the underlying bias of the market, but generally you don't even really need it. It's just kind of an exercise in being creative and being more thorough on what is the bias, so you can be a little bit careful. So here's the market selling off in the morning. Well, I don't usually trade off the opening, but if you wanted to here, I mean, you got a market that's slowly grinding down. Then it starts getting spiky off the opening. Here's the crossover. Everything turns red. Their first pullback sig line is clearly marked there, 86, and they drop them right down. So there's our first winning trade. If you just go strictly by what the chart's saying. Here's a choppy crossover. So when you get that whipsaw after a steep move, just wait for the second buy trade. See what I mean? Here's the first one. Don't worry about that one. Just take the second one. Or in this case, you can see it whipsawed up. There was the crossover, so you can always buy the Cobra on these. As long as you have the immediate crossover occurring, you can buy the pullback to the Cobra. But generally in this, after a long extended up or down move, just wait for that second signal, and there it is there, and there's your buy signal, and goes straight up. You kind of got a choice there. A little bit of discretion, which how heavy is a whipsaw? In this case, it was pretty heavy whipsaw. And just let them whipsaw around, and there's another sell channel, but then here comes a buy channel again. There's your second buy channel, and that's when you get a smoother upside move. So same thing here. They get to the top, they start peeing, they're really willing to blast them to the downs. So the sell side was very fluid on this day, and all we're doing is looking for the spread to tighten. Before the spread tightened, the colors changed here, so we got short here. And if you didn't catch, well, let's see what the spread was there, was 91.25, 92.75. So that spread was 1.5 points here. You could have taken this trade right here. Even if you missed that, you would have wanted to try to trade at the Cobra up here and then short them down there, because right in here you're kind of in a no man's zone here. You might get whipsawed out, but you could just trade at them here. Or if you missed it, you got to learn to, I got a note on my desk that says, so what, who cares, no big deal. Those three phrases, I love those phrases. So what, who cares, no big deal. It's just trading. It's another setup, and there's going to be 5 or 10 more that day, and there'll be 10 more tomorrow, and then the rest of the week there'll be 40 of them. So why do you care if you miss a setup because it wasn't crystal clear that you could get in? You just look up and say, who cares? It's good for mental health when you're trading. Besides, say you missed this. Well, what do you see here? A counter buy channel, so now you're watching to see if it fails. Here's a sell channel. Okay, it's failing. The dynamic trend band is still bearish. Sell at the dot here, and down they go. There's another winning trade. So that's trade number 3, winning trades on 9/25. Then some choppy downside whipsaw move. Same thing, same old routine, right? What happened? A big downside move towards the bottom. They started getting all choppy and crazy. Here they go here, jumping up here, all flipping out. Well, what do you got, though? You got a brand new crossover. The dynamic trends and bands are matching. A new buy channel that jumped up. What's the rule? What's the rule? Yes, trade the space between the Cobra and the DTB number 1. You can directly use the Cobra or just the space between there, right in this area, and take your chance there. 71 quarter, and they shoot up. So that's your fourth winning trade for 925. See how that works? That's right, Robert. Those counter buy trades, although sometimes they may seem the most difficult to trade, they're close to 100% winners. I mean, they always, the reason is you're on that bias side already in the downtrend, and the reason they're so good and powerful, and you got to learn to take them, just train yourself to take them, is that when it tries to reverse and fails, what is that saying? There's so much sell pressure in the market. Well, the minute they go into the sell channel again, blam, they're just get right in because they're down. Get that next yellow dot. Don't look so much at the arrow. Just watch for that yellow dot. When you see that yellow dot print, hit them, because look how fast they fall because they're already in that sell bias. So good point. I'm glad you brought that up, Robert. And then so they move up here again. Now they get choppy. Expect tops and bottoms usually get a little choppy, so don't be too anxious. Just patiently wait. And look, here's something I just mentioned to you earlier, and you can see it happening. They get close to a top or bottom. They start whipsawing around. They don't just let you right in. They kind of whipsaw around. Then you get the sell arrow, and that's fine. You get the tight spread, but then what happened? They got crunched down here. So right away that tells you don't trade right away at the bottom of the trade channel here. Just give it a little, it's getting ready to cross over here. So that rule, remember that rule is you're going to try to trade the Cobra or maybe a little better up to or in between the dynamic trend band number 1, somewhere up in there. So just say you took the Cobra at 83 quarter. Well, it still easily held the stop. That's why you got to have that stop. You got to give it wiggle room. I'm telling you, you got to trust me in that. A tight stop isn't going to help you. It's going to make you lose money on trades with Boomerang that are going to win. You got to have money to capitalize your account and be willing to do the system right. So you get short at the Cobra. Maybe you got them a little better. Maybe you got them up there at 85 and a quarter. Hardly any pressure then. Down they come. Even if you missed it, who cares? Here's a new sell channel. Here's a couple sell dots. Boom, down they go. Don't worry so much about that. Just get the right configuration, get the right setup, and take it with full confidence. Trade number 5 and number 5. Now this is a little slower, choppier day. Notice I got 5 winners by 12 o'clock Eastern Standard Time, 12:30 approximately, right? Well, we had about 9 on the previous day by then. Now we have 5, but you should be done for the day here. 5 winning trades in a row. Hallelujah. You're home, all those years of struggling to figure out trading and suffering and not able to get it right, and now you're home. It's working. You got Boomerang Day Trader. You got me here every 2 weeks to go over this stuff with you. Just join in or watch the videos. Just stay in touch, and that's it. I've got a question here about using the live trading room. You don't have to purchase Boomerang to be in the live room. All you need is a platform to execute my signals. Now keep in mind, it's not a Boomerang training room. I'm going to take a lot of these Boomerang signals, but I have modifications that I use, and like sometimes I'll take a trade like up in this area. I don't have my exhaustion reversal chart. I use a whole separate chart with about 7 other indicators on it to get absolutely as strict reversal target as I can, because those are high risk trades, but I do use those when they're really clear to me. But yeah, you can join the room, just trade whatever broker platform you have and just trade the signals. So I'm going to say, say we're going along. Well, here's what let me show you this. If you want to see exactly what it's like in the room, if you can handle it, to see if you can handle it, let me show you this here. Just go to my other blog site, which is daytradersaction.com, and click on Trading Live with Mohan. See that? daytradersaction.com, Trade Live with Mohan, and watch this video. This is exactly what our room, it's a live recording from the room. I turned on the recorder and I had 3 winning trades in a row, and I said, oh, that's good. That'll make a nice video. Traders can see exactly what it's like in the room, the speed of the trade, my dialogue, the way I narrate, all that stuff. And then if you want to sign up, you can sign up here for a subscription right here, joining now. Sign up for subscription. Now, a lot of people misunderstand that $29 is a trial. It's not. It's the start of a subscription, which after 2 weeks will bill for $249 a month. Within that 2 weeks, you should be able to make at least 10 times the cost of the subscription. So if you don't subscribe, I'm going to remove your name from the list. You won't get any more briefings. But if you make 10 times the cost of the and I'm not talking about the $29. I'm talking about the $249 in the 2 weeks. You should be able to make that. Why wouldn't you subscribe? I don't know. Some people, they can't handle the speed of the markets and all that. Now, we do have auto trade also. We got Mason from Global Futures will trade the signals for you. If you're in the room a couple weeks, you go, wow, I like this, but it's kind of intense, and I've got other work I do, so I'll just have you do it. That's okay. Here's another winning trade here. 6 winning trade in a row. Now I'm going to speed up a little because I've spent a lot of time already. Now, here's a trade where you go, wow, that's a sell trade, right? Nope. Spread's too wide. We got to follow the rules. There's too many of them that's set up according to the rules, so you want to follow those. Now, arguably, prices are below the dynamic trend band. It's flattening. The Cobra's crossed over. Right here. Now, this one, see this here? 78.5. Okay, perfect. 78, 75, 78.5, 78, 75, and 80. That's a 1.5 spread. You might have caught this one here. We want to get this when the trade channel opens. Boomerang is programmed by me. I programmed it to mark up to 6 candles from the trade channel opening. 1, 2, 3, 4, 5, 6. I think it counted this one. 1, 2, 3, 4, 5, 6. Yeah, this was the 6th candle, so it's not going to mark this one. But those dots don't mean they're all entries. You want to get the earliest dot you can within the rules. The rules is 1.5 spread, so this one would have been it. And down they go. That would have been the 7th winning trade in a row. But it is getting a little late in the day. But look at this. Same old routine. You got to love that same old routine. Counter buy channel that fails. So you've got your finger on the trigger. The sell channel opens and they just fall apart on the downside. You couldn't get in. Sorry, it happens. And what do you do? Okay, little quiz for you. What do you do when this happens? You get that counter buy. You're 100% ready to hit the next yellow dot or pullback sig line. The channel opens and they just fall apart to the downside. You don't get in. What do? That's right. You look up at your sign on the screen that says, so what? Who cares? No big deal. You got to. Otherwise, you get too attached to it. It happens to me sometimes. I'll hold a trade in my trading room sometimes. I'm looking for a big move. This happened the other day. I was looking for a 10-point move. I swear to God, and it's amazing. It doesn't just happen to you. It happens to me too. The move went to 9.75 gain, and I didn't take it because I thought, well, of course they're going to hand me one more tick, close this trade out. 975. I sat there, not because I'm dumb. Maybe I should have probably just clipped the trade, but I said, well, we're going to get another tick because there was a lot of force and it was a sell trade. Went 975, went 10. I said, okay, let's bring them back here. Went 1050. All right, give it a minute here. It's gathering some steam to go back down. Went 11, 11 and a half. It went all the way back to the entry. And we'll close the entry, and I clipped the trade for a point gain. Hey, I myself had to look up at my sign, grinding my teeth. So what? Who cares? No big deal. But I was mad. Okay, look, it happens to you. You got to just, but you got to have some kind of tool to help you stay not freaked out about trading. And like I said, I grounded my teeth out and said, do what you say to do. And I blew it off. And later that day, this was what's today? Is when this was Monday. I had two 13.5 point trades on that day after that one, after I missed that one. So, yes, who cares? So what? No big deal. You got the three of them. They take your mind down in three levels. So what? Okay, so what? First of all, yeah, so what? I missed it. And then who cares? And then no big deal. You just tell yourself it's not a big deal. Why? Because there's another trade around the corner. Here it is. Of course, now this one you can't take this one because this is a third level trade, but just as an example. Reversal. Well, the normal rule, listen to this. These are the ideal type of second level move or counter moves that fail. When they cross the dynamic trend bands crossover, that resets the pattern, and you have to go back into re-looking at the trade as a whole new pattern. See, this reset the pattern because they actually moved up. It wasn't a buy trade because you didn't have a bullish colored dynamic trend band, and you're still in a downtrend, so this would not have been a good trade. This is flat to sloping lower, so you wouldn't want to take in this buy trade. But then when the sell channel opened, all the trend bands match again on the downside. The yellow's kind of buried under this thick DTB number 2, but there's your sell signal there, and down they went. So that was like the 8th trade in a row. Now we're getting into the final hour. Now here's where they finally stage a rather smooth reversal where there's, the whipsaw kind of came out of the market in here. And when they finally did cross over this time, because they had already crossed over up here, it was like when they finally smoothed out and crossed here, it was a nice smooth buy signal. Crossover, buy, up they go. Would have been the 9th winning trade in a row, and you're pretty much done there because you're rolling into the final hour. And, you can trade the final hours if you want, but I generally don't. But the rules are the same. Tight spread, pullback signal line, up they go. Pretty amazing, huh? Here's where it gets really whipsaw. In the last 20 minutes, you can really be taking a lot of extra risk. Who needs it? Made 9 winning trades in a row, so 225 times 9, $2,025. So if you traded all these exact boomerang setups in the last 2 days and you caught all the trades, 12 and 8, 924, 9 and 925, you'd have made a total after commission of $4,713 on the small a $5,000 account, 5 to 6 with a little money and backup for cushion if you need it. You got to finance the business. But almost 100% return on a $5,000 account in 2 days. That's futures. I don't usually rate it as return on percent and all that because it's more, I look at it as more like a business. Making $500 to $1,000 a day or more. And I tend to look at it that way. So I'm going to wrap this up in a minute so we can do some Q&As. Here's a new trading day. Nothing here. Same thing. See here, 2 days just got away from us, and they're just getting hammered to the downside. Now they come back, a little whipsaw. Use that rule where they run up, pull back the signal line, cobra to the DTB1 zone, up they go. Fast whipsaw down, nothing to do here. Whipsaw, whipsaw. See, Boomerang tells you when whipsaw is going on. You just learn how to read Boomerang. Counter candles, spike up, spike down, red candle, gray, gray candle, green, red, dot. You got to wait till it all just settles down. Here's all the dynamic trend bands here are matching. You can see that. You can trade a short here. Here's where the crossover has occurred here, and the colors are matching prior to that, so you could have taken this pullback here and run them up. Here's a short here, down they go. Choppy period, same thing, gray candle, green, blue dot, yellow dot, red candle, it's just all chopping around. They crossing over on the upside, which is a caution for a bias leaning to the upside, but then when all the trend bands as they start going down, you get a new sell channel. All the DTBs are matching. There's your cell there. If they're all matching, it doesn't matter what the configuration is. If all the trend bands are matching color and you got dots in that side and a cell channel formation, you can take that trade. More whipsaw, more whipsaw. See, here again. Even though the crossover is the upside, it's failing. And usually when a crossover occurs, it fails. You get a stronger move when it reverses again. So here they are matching again, and down they go here for 3 points. And then a larger extended move. Real whipsaw, choppy crossover. Right in here, boy, I would have 3 or 4 trades. I would have taken the day off because this is too much work here. This is too much whipsaw. You can stay and fight it if you want. Here they are matching trend bands. Pull back the signal line here at 13 runs 16 and comes down. You can take them. They're going to be very reliable, but you know, emotionally you'll have to pay a little bit for it because it's so much whipsaw. All the colors matching here. Pull back signal line. That was an easy one there. No second level move here. You got to have that buy arrow on the opposite side. Nothing like this. You got to have the buy arrow. And then a counter sell arrow. See, the buy arrow, when that fails, will give you a counter sell arrow, and then it just resets up the trade real nicely. Everything matching here, pull back signal line, up they go. Watching for a tight spread here in this area. Trade's gone. So what? No big deal. Who cares? Counter buy channel that fails, new sell channel, pull back signal line, 3 points instantly. Right, Robert? Those work good. I love those. Once you get used to taking them and you kind of train yourself, a little bit of robot, a little bit of human, that, oh, a second level sell trade. I'll take the trade. You know, you don't want to be too human, otherwise, because your emotions will keep you out a lot of trades sometimes. But just stick with the program. Same thing, all matching trend bands, pull back signal line. Honestly, it's the same old routine. Crossover, real choppy, red candle, gray, up arrow, down arrow, yellow dot, blue dot. See that? Yellow dot, blue dot, whipsaw, data. Here's the crossover. Then when the sell channel comes in, then everything's matching. You trade at the signal line, and you get the right trade. You just have to wait. Don't let this bother you. That's just Boomerang talking to you. It's like when your dog's barking in the middle of the night, you know something's wrong. You get up and find out what's wrong, and you go, oh yeah, it's some coyote out in the backyard. You go back to sleep. Tell him to be quiet. That's just whipsaw. It's just noise. Let everything smooth out, and then there you go. So with that in mind, like I said, I could go through, time's kind of gone on because I took some time to really explain everything, and that's good. But I wanted to make sure you fully understand, and I got to go through 2 complete sessions. We do have a recording on the blog here. I want to point this out to you. Most of you have seen it. Some of you haven't, but I want to make sure. I took one day on one of these sessions, and it was a long session, and I warned everybody. I said, I am going all the way with this deal. I'm going to go through every setup for 2 weeks. And I did. And I recorded that. And what I'd like you to do is take a look at that if you haven't seen it already. I think this is it. Let's see here. How time flies when we're having fun here. There it is. Boomerang Day Trader detailed review of trade setups from 4/7 to 4/22, 2015. Hey, it's all the same. Don't think, oh, that was then, this is now. No, it's all the same. I went through, it was a lot of work, and I told everybody this is going to be a long webinar because I'm going to record this, and it's going to take a long time, but I'm going to commit and go through exactly 2 weeks since our last bi-weekly training, 12 sessions from 4/7/15 to 4/22. That was 12 sessions over just approximately 2 weeks. And the results were 71 winning setups. The Boomerang trade setups are targeted to take a 3-point gain. Every single setup, 100% was a winning trade, and there were no losing trades or stop outs. There's no 5-point stop outs, 0, none. So you have a recording of me going through that 2-week period. It's very long, but if you got an afternoon, you can take 2 or 3 hours and watch it. You'll see what I just showed you today on 2 setups. I did it on 12 setups, 213 points, which totals 4,260 per each E-mini contract on the NASDAQ, which on a small account have been about $16,000 for 2 weeks of work. So, I have that on here, and someday I'll do it again, but it was a lot of work and it was fun. But I'm just saying, just go to the blog and go to page 2 of that blog and look for BDT detailed review of trade setups. And you'll see the breakdown. You'll see me break them down, meticulously write them. I did that today on 2 trade days, 924, 925. Not for any reason. I just scrolled back to 2 weeks and started. I was thinking I'd get through more, but that's not the way it went. So with that in mind, I'm going to take your question and answers now, but I'm going to turn off the recorder so we can have this nice crisp recording to put up on the blog of what I just did there, going at least through those 2 trade setups. And I'll go over today's with you on the Q&A session here, if that's relevant to you. But so let me go ahead and end this here, and thanks for joining with us. Just a moment.